What's going on, guys? How are you? How are you doing? This is Shocks, and this is Shocks Capital YouTube channel. Today, we want to talk about a beginner guide to online Forex trading. So, we're going to be talking about what is Forex, and we're going to be talking about all you need to trade online, right? And we're going to be explaining how to read charts, how to do everything, and we're going to explain every term that you need to understand for you to start trading. And after that, we're going to give you a beginner strategy that you can use to trade as a beginner. So if you are a beginner and you know nothing to do with online Forex trading, this guide is for you. Watch through the end and understand what you need and what you don't need to trade Forex online. So we start with what is Forex. Forex is short for what? Foreign exchange. And it means that you are exchanging one currency for another. Let's say you live in Nigeria and you want to go to South Africa. You would need to change your Naira for rands so that you can use rands in South Africa. So that is what foreign exchange. That is exchanging one currency for another. And if you are doing it online, you are exchanging currencies for another for a profit, right? So if you buy, maybe for example, if you buy the euro using the USD when the rate is 1:1, and when you then sell when the rate is 1:2, you'd have made yourself $1. So that's exactly how it happens. So let's say you buy for $1, right? And you sell for $2. So what you are doing and how you are making money is what the difference between the selling price and the buying price, which means that you are making money using these two, right? So with that being said, let's just go right into it and talk about foreign exchange. So how does Forex trading work? So Forex trading can be defined as the process of speculating on currency prices to make a profit. So what you are doing is you are speculating one currency to go up from its starting point. Let's say it's at $1, right? And if you are speculating that a certain currency is going to go up to maybe $5, it means that you want to make this $4 profit when you buy $1 today and sell it at $5 today. So remember, we are explaining this in basic terms so that you understand the basic requirements or the basic workings of a Forex trading transaction online. So the objective of Forex trading is to exchange one currency for another in the expectation that prices will change and you make a profit depending on what you are going to be doing. So remember what we are talking about. The example that we are talking about, let's say you buy at $1, right? So this is $1. Maybe you buy €1 as to $1 and you are using euros to buy. Or let's say, for example, you are moving from America to Europe, and you want to change your dollars, your USDs to euro. Let's say you change $50, right, today, and you get and you get maybe, let's say 40 euros, right? You get 40 euros, right? Let's say you use only 20 euros in Europe, and you want to change your 20 back to USD because you want to be flying back to the United States of America. So let's say the rate has changed here, 40 to 50. Maybe it's now 50 to 50. It means that on your $20, you are now going to get your on your 20 euros, you are now going to get back your $20. So it means you have made a profit. Instead of getting maybe $15, you get 20 when you exchange. It means that you have made a profit of $5. So this is the simplest representation of Forex trading online that you should know and that you are going to be doing on. So we're going to do how to read the Forex code. So remember, when you are trading, you don't need to be trading one currency for another, or you don't need to be owning a certain currency when you are doing online trading. So you would need to understand a code. So a code is a representation of a Forex trading pair where you are going to be. So if you are going to be trading online, Forex trading or pairs are going to represent your transaction. So you sell just a pound. Remember, if you are doing a Forex trading transaction, you have two pairs, the one that you are buying and the one that you are selling. So that's why you represent them in a quote like that, where you need to have two currencies like GBP, USD. So these are two. It means the first one is the one that you are buying, and the second one is the one that you are selling. If you are selling this pair, it means you are selling the first one and you are buying the second one. So it depends on what you are doing for you to actually be able to represent this very well. So currencies are always quoted in pairs, as I alluded earlier. So we have GBP USD or USD JPY. So the reason they are quoted in pairs is that, as I was explaining, in foreign exchange transaction, you are simultaneously buying one currency and selling the other. So you don't actually buy one currency without the other. So if you are buying one currency, let's say, for example, you are buying the rand, the South African rand, and you have what? The US dollar. When you are buying the South African rand, you are selling the US dollar. So that's why we have what? Pairs. So these pairs represent what we call a base currency and a quote currency. So the base currency is the first one, and the quote currency is the second one. So if you're having the GBP USD like this, and you say the price is 1.21 like this, it means that the base currency is always 1. So it's 1 as to 1.21, right? Let's say the South African rand today is maybe 17 to 1 USD. So you say USD ZAR, which is the USD ZAR, which is the US dollar versus the South African rand. So the US dollar is always 1, and the South African rand maybe 17. So we are saying the USD ZAR price is what? Is 17.5678. And this is a representation of what? Of our prices, depending on what we are doing and how we are looking at it. So this is how you represent a forex quote, and this is how you read it. So we have a base currency and a quote currency, right? So after that, what do? We go on to the next thing that you want to. So you have to know when to buy or sell. So forex trading involves trying to bet on which currency will rise or fall versus another currency. So if you are looking at the US dollar and the South African rand, you're saying that the dollar versus the rand. Is the rand going to fall against the US dollar, right? If the rand is going to fall, it means that you're going to use the rand to buy the US dollar, so that when the rand finally falls, you then change back to the rand and make a profit. So if you believe that the United States economy will continue to weaken, which is bad for the US dollar, you would execute a buy Euro USD order, which means if you buy Euro using USD, you are kind of safeguarding your US dollars, so that when the US economy falls, your money is in Euro and the value of your money is not falling, which means, in other words, you are making a profit, because if you change back, you will get more US dollars with the Euro than those which you have used to buy that particular currency, which is the Euro in this example. So you have bought euros with the expectation that the euro will rise versus the US dollar, and by so doing, you'd have made a profit in the event that the US dollar is actually going to fall. So how does forex work? So forex will work like this. Let's take, for example, that the price is at this particular point. So this is the price, and if you buy at this price, let's say maybe it's 5 here. If you buy and price continues to go up like that, it means that you'd have made a profit if you sell at a higher price, maybe 10. So if you sell at 10, you bought at 5, you made a profit of $5, everything being constant. Then if you buy here and price goes lower, it means that you'd have made a loss, and if price goes to 1, maybe you'd have made a loss of $4. Everything being constant. And if you come here and you sell at this particular point, right, at this particular time and price, right, you sell there, and if price goes lower after you sell, it means that you would have made a profit, and if price goes up, it means that you would have made a loss. So that is actually how forex trades. So it works so forex is more like a contract for difference. So you buy and expect a difference. So the direction that price will go will determine if you make a loss or if you make a profit, depending on what you are doing in terms of buying and selling and how price moves after the transaction that you have made, right? So let's look at the next thing on our agenda here. So units of measurement. How actually do we measure in forex trading? So we measure forex with what we call a pip. So price is measured in price is always represented with 4 decimal places, right? 4 decimal places. So the fourth one is what we call a pip. So the difference between the 4 decimal place is what is called a pip, and that is what is used to measure. So let's say price moves from this price to 1.1238. It means that price would have moved 8 minus 4. It would have moved what? 4 pips. So this is actually how you measure. So this decimal place is where pips live, right? So you would read this as 4 pips. And if it moves to 8, it is 8 minus 4. Then there's a difference of what? Of 4 pips. And trading with one lot size there, you would actually have made $4, right? So that's actually how you move. And the lot size that you are going to use is what is going to determine how much you make after the price moves from this point to that particular point. So with that being said, let's just move. So let's talk about who trades Forex, right? The participants in the Forex market. So we have individuals like you and me, then we have brokers. And if you want to get a broker to start trading Forex 24/7, there is a link in the description down below where you are going to open a demo account and upgrade to to a real account and start trading. The link is in the description, and the broker is Deriv, right? So we have companies, right? Companies always trade Forex, like we have those multinational companies that operate across countries, across continents and things like that. We have central banks for obvious reasons. We have institutional investors like hedge funds and things like that. And we have commercial banks like your usual banks, right? So these are the participants in the in the Forex market. Everyone does this for a reason, and this is how we are going to be looking at it. And we are going to be trading as individuals to actually make an income or to actually make some money using a broker of our choice, which is the one in the description down below, that you can start now and you can trade using Deriv, and you can trade anything you want from indices, currencies and things like that. You can trade anything you want. And let's go and look at the next thing on our agenda, and you're going to be talking about leverage in Forex. So what is leverage? So you're probably wondering how a small investor like you can trade large amounts of money in the Forex market. So think of a broker as a bank that basically gives you money to trade. So remember, I was talking about brokers on the previous slide, right? And we were talking about a broker giving you a platform to actually make money. So that same broker that we were talking about in this example, we're talking about Deriv. It gives you, let's say it gives you maybe 100,000 to buy currencies, and you have to put in maybe 1,000 as security for that amount. So it means that leverage helps you to trade 100,000 size of a trade using using a deposit of just 1,000. So this is like your account balance, and let's say that you have maybe 1 in 1,000 leverage, and you are going to be trading that 1,000 as if you are trading 100,000. So that's actually how you leverage on Forex trading, and actually be able to make money that you would have traditionally not been able to make, had you not been fronted this 100K that you are talking about. So sounds good, but this is Forex trading. So it means that if you are going to make a profit of 1,000, it also means that this also works in reverse. If you are going to make a profit or if you are going to make a loss. So if you are going to make a loss, that leverage also works in against you, and it works for you and against you. So you have to be understanding of that fact, and you have to know what you are doing when you use leverage. So margin, what is margin? So typically the broker will require a deposit known as margin. So the deposit that you do, so let's say you open a trade, maybe you open a 0.1 trade on any particular currency or indices. That particular trade will take a kind of a margin from your account balance. So it means that, let's say you have $50 in your account, and you want to open a trade on maybe you want to, let's say you have $50 in your account and you want to enter a trade on EU. It also means that when you enter a trade on EU, maybe the lot that you're going to use, maybe you use lot one to open, or for you to open, you have to commit maybe $30 to this particular trade. It means that the margin that you're going to be using is 30. And if you go into loss, this margin will fall until you get what we call a margin call, when the money in your account is not enough for you to open a trade. Let's say you get to $30 loss. It means that you get what is called a margin call, where your trade will close and you will be left with $20. So that is how margin works in the Forex market. So any losses or gains will be deducted or added to the remaining cash balance in your account. So this is how it works, and you have to understand it so that you know what you are doing. So before you open any trade, you have to understand the margin required for that trade, or the amount or the deposit that is required to open that particular trade for you to get into that trade. So let's talk about what is called stop loss and take profit. Let's say that, for example, you enter your sell trade at this particular zone, and your stop loss is here, your take profit is here. What it means is stop loss, from its name, it means that if you enter a trade and it goes against you, the market or your broker is going to get you out of that trade without you having to do anything. So let's say you enter here and you agree that my stop loss is $5. It means that if you enter into a loss of $5, that trade is going to close automatically, and this loss is going to be deducted from from our account balance, and you are going to be left with the balance that you have less $5. So that this is stop loss. And take profit, it means that if you enter a trade and it goes in favor of the order that you have opened, let's say your take profit is $20. It means that if the market moves to your $20 take profit, the market is automatically going to get you out of that trade, and the money is going to be added to your balance, and you have made a profit. So that's what is stop loss and take profit. So stop loss and take profit price points that you set after you enter a trade, so that when price gets to that certain price, you get out of the trade with either a loss or a profit, depending on what you are doing and how you are trading. So with that being said, let's look at the next thing on our agenda. So reading charts. So how do you read charts, or how do you read candlesticks? So charts, forex charts are represented by what we call candlesticks. So these are two candlesticks. So we have this red one, which is a bearish candlestick, and we have this blue one with the green one, which is a bullish candlestick. A candlestick will show how price moves. So this one is showing that price has gone down during this particular time period, and this one is showing that price has gone up during this particular time period. So it means that if it's a green candle, or if it's a bullish candle, bullish is a candle that goes up, and bearish is a candle that goes down, right? So this price here is what we call the opening price, and this here is what the closing price, and this is the body of a candlestick. And this upper wick or the shadow shows the highest price in that time period. So this is the highest price, and this is the lowest price that is shown on the candlestick. Same applies here. This is the opening price, and this is the closing price. This is the highest price in that time period, and this shows the lowest price in that time period. So this is how a candlestick is actually read, or this is how you actually read a candlestick. Let's look at the next thing, reading candlestick chart. So this is now a candlestick chart where we are now having more candlesticks. Remember, if you look at this one, you see that it's written H1, which means each and every candle in this picture shows movements in 1 hour of price. So if you are to start from here, this is 0000, which is midnight, right? So one candlestick in this area is from 000 to 0059. So this is the 1 hour period. So from 0100 to 0159, that is another candlestick. So this is a 1 hour movement of price. So if we say this is the opening price, this is the closing price, we are saying the opening price in that 1 hour window, and the highest price in that 1 hour window, and the lowest price in that 1 hour window, until we get our chart like this. So this chart is something like this. So it shows that how price is moving. So this is how you actually read a candlestick chart, and this is actually how you make decisions when it comes to trading using candlestick chart. So this is the chart, and if you look at this chart, you clearly see that price is actually going down, because that's actually how you read trends, right? So price is going down, and if you want to get involved in this particular chart, you then need to maybe wait for an opportunity to sell, so that if price continues to go down, you would make a profit with price moving down and with a sell order. And if you look at this is called Volatility 75, and these are indices that are offered by the broker called Deriv. The links to trade these ones are in the description down below. And these ones are available 24/7, unlike currencies that are available 5 days a week. So this is available 24/7. If you want to start trading and you want it easy, you have to get an account with Derif. You get your demo account, you practice, and you put some money and start trading. So this is what you're talking about. And if you want a strategy that you can just go right into it and start trading, you search on this channel. There are a lot of strategies that can tell you how to trade volatility indices, and you can make a lot of money in a day, in a week, in a month, depending on how you are doing. So with that out of the way, let's just go and look at the next thing on our agenda, the quest of making you a beast in trading online. So this is now reading trends. How do you read trends, right? So we have what you call, so this is a candlestick chart that is what? That is going up, and this is a sideways trend, and this is a downtrend. So when you see price making what we call higher highs and what and the higher lows, as you can see from this picture. So this is what lows, right? So if you see price making these higher highs, as you can see, price is going up. So this is called a bullish trend. And if you see price not making highs and not making new lows, it means that we are in what is called a sideways trend. And if you see price making what is called lower highs and lower lows, as you can see like this, we are in a downtrend, and price is tanking and going down. So this is how you actually look at it if you are to read trend. And remember, if you want to make money in the forex market, you have to follow the trend. So if the trend is up, you have to make sure that you are trading up and you are buying. And if the trend is lower, and you have to trade downwards, and you have to be selling so that you follow the trend. So the trend is your friend. And if you're looking at this chart again, remember this is now Volatility 51S. And remember, these are offered by the broker code Derif. The links are in the description down below, right? We have price moving downwards. So price is making what we call lower lows, as you can see. So we have what we call lower lows. Price is making lower lows, and this is what is called a downtrend. And if you look at this side, price is making what higher highs, and this is what an uptrend. This here is a sideways trend. So this is actually how you read the trend using volatility, using candlestick charts, right? So this is just as an example on volatility indices. This is, you can trade anything with candlesticks. It doesn't matter what it is. So what you have to know is how you are going to do it. So here we are looking at what you do before your first trade. So before your first trade, what you have to do is to open an account with a good broker. And here I have given you a good broker to do that. And you have to choose what to trade. So we have a lot of things that can be traded with what? With candlesticks. We have a lot of things. We have currencies. We have volatility indices. We have stock indices. We have stocks. So we have to choose what to trade. So for starters, if you're a beginner, you have to trade what you call currencies, and you have to trade what is called volatility indices for you to make what? To make money and to get this quickly, right? Practice on demo. After you know that you can make money on demo, you then fund and start trading. So the links to open your first trading account are in the description down below. And what you have to do from now is just to get your account and start trading. So how to place your first trade. So I'm going to show you on the charts how to actually place your first trading account. So I'm going to show you this on chart. So let me just show you how to place your first trade, and hope that you are going to enjoy your trading journey. So this is how to do it. So this is how you actually place your first trade in Forex, right? So what you do is you are looking at what? At volatility 251S. Remember, this is what on Derif, and the links to this broker are in the description down below. If you want an account, you can get an account now. So this is what we are doing here, right? Number one, what are we doing? We are looking at this trade, and this is what on M15. Let's go to the H1. So we're looking at the H1 here, and what we are doing is we are seeing that this is actually going down, and this is a downtrend. So you need to be selling in this environment, right? So with that being said, what do you do now? You look at this, and you are saying, okay, since it's going down, I need to be selling. So you then come here, you see the way they sell and buy here. So the first, this number here is what's called the lot size. Let's just put 1 there and sell at this particular order. So you see that we have what you call sell 1 at this price. So we have sold this, And if price then moves towards in our direction, I want to show you what happens here. So price goes lower. You see that this is the profit that you make if price goes lower, for example. So this is now your take profit. Then if price goes against you, let's say to this angle here, you see that if price goes against you, and let's just see how much you lose on this particular trade if price goes against you. So as you can see, you lose this amount of money and that amount of points. So remember, we're talking about pips, which is the difference in price, right? And this indices shows you in what? In points. So points are not different from what? From pips. So you have sold here, and I want you to see that in this particular, you see these two lines that right there, these two lines. Price is going what? Price is going down. Price is going down. Price is going down. So this is what? This is the difference that price has. And we are looking at this and seeing that you are now in what? You are actually in loss. And if price goes below this what? This order price, then you are going to be what? In profit. So as it stands, you are what? You are in loss and you are in profit as price goes below this what? This green line. And if you want to close this trade, you just come here and what? And click like this, then you go to what? Close, and you have closed your sell order in a loss. And if price had gone to your direction, you have closed in a what? In a profit. So this is how you actually enter your first trade. I'm looking forward to seeing how you actually develop in your what? In your quest to trade Forex online. If you want help, I'm available, and you can contact me with the details on your screen right now, and I can help you in looking at these things and how you can navigate your trading journey. My name is Shocks, and I'm out. I hope this was helpful. I'll see you in the next video. Shocks out.